Okay, so 10,000 for 20 years, return is 39 lakhs. 10,000 rupees per year. Aishwarya, am I right? But not group, in this, here, in this form. In this form. Tanmay, in this form. Okay, in a form you have done. Okay, fine. Yeah. Okay, so now you tell me, Aishwarya, you need to be with me. Okay, you need to be with me because you'll have to answer my questions. 10,000 for 20 years. 10,000 per month or per year? 10,000 per month or per year? Aishwarya, it's per month or year? Yes, ma'am. Month or year? Per month? Aishwarya? Per month? Aishwarya? Quick. Per year? Oh my God, per year, are you sure? Mostly per year. Okay, per year. Okay, 10,000 per year. That's huge. Okay, 10,000 per year. Okay, anyway, 2 lakh. Okay, that's huge. Okay, it's per month. Yeah. This looks like, it cannot be like, people in the company will go bankrupt. Okay, I can see and I can tell. Right. So now here we'll have the periods and here we have the cash flows. Periods are per month. Per month means how many months total how many months? Total how many months? Total how many months? Months. 240, right? 240. Total 240 months. Okay, so 240. Oof, 240. Kidhar hai? 240. Yeah, got it. 240 months. Okay, so then after that you are 10,000 every month. Okay, so minus 10,000. Minus 10,000. So every month, and then at the end you are getting 39 lakhs. 39 ekak. Okay, Aishwarya. Thomas Matthew has already done it. Okay. Aishwarya, it is done. Okay, everybody has calculated it. Okay, so done. Okay, so now those who have already calculated, give me the result. Those who have already calculated, it looks like 0.4%. I said, you have also calculated. You see, you yourself has become so expert, right? So what you have done? What will have done? What you have done? What you have done? What you have done? What we have done? Equal? What method? What method? Quick. What method? IRR, right? Yeah, IRR. Let me check. Okay, if you are getting NUM, then you will have to do what? You see, if you are getting NUM, just after B2 to B245, then we give comma and give 1%. Okay? Always remember this. If you get NUM, then give 1% at the end. .38% per 0.38% per. Yeah, Aishwarya, that also you can do. Yes. Yeah, Aishwarya, that also you can do. You will get the same result. Okay, 0.38% per 0.38% per 0.38% per month. Okay, so is equal to 0.38% into 12. 4.51% per year. Okay, you can use any of them. Okay, because I was emphasizing on this thing. Got it? Okay, Aishwarya, you have got it, right? Yeah. So what is the name of the scheme? What is the name of the scheme? Anyway, if you don't want to disclose, that's fine. Such that like people can be aware. Postal. Okay, Postal Sumangal scheme. FD. Right? Yeah, that's what happens, right? That's what happened. You should have joined. Okay, if possible, stop it. Because I am pretty sure if you have some knowledge, some more knowledge, you will be able to make much more. In fact, in bank fixed deposit, or if you go for in fact liquid fund, you will get much more, probably. without any like a very nominal tax. Why? So for that, you need some knowledge. Okay, stop it. If you cannot stop it, make sure from tomorrow onwards, you are not going to invest in such kind of products. All right. Okay. Okay. So now, okay, let me see your questions. Okay. Oh my God, so many questions have come. Oh my God. Oh, oh my God. Okay. Okay, one by one. Okay, one by one. Hello, sir. I am highly invested in mutual funds, and since we all know good returns of mutual funds generation 10 years long term, I have question. I am looking for very long term. Can I have some years India lead to a position which neighbor countries like Pakistan and Sri Lanka are facing, because accumulating and investing huge sum of money doesn't make sense then. Need your views on this. Tanmay Agarwal, you see, nobody knows what is going to happen. Okay. So now, yeah, we need to be very sensible. Citizens should be good. That's what, because it says socio-eco-political question. So I don't know whether we'll be like Sri Lanka and Pakistan. Okay. We don't know that. Only thing is that if you are investing in Nifty, let me tell you, I don't know whether you know it or not. Those who have invested in Nifty, I have the numbers and I do crunching myself. Okay, as an analyst, I was an analyst, right? Yeah, today also, I think I am an analyst, right? So 10 years, if you invest in Nifty, 10 years, people, those who have invested in Nifty for 10 years, they have earned 6% to 20% return. A lot of people, they have made 6+ percentage, and some people have made 20%. So that is the range. Median is 14%. Okay, but most of the people, they make money 6% to 14%, right? So now, to become somebody above average, you need to have more knowledge on mutual fund. That much I can tell you. Okay, I can tell you that much only, not more than that. What will happen, whether we'll become like Pakistan or Sri Lanka, we don't know. Nobody knows. Okay, right? Only those who are sitting there, so they may know. Okay, so but at least for like people like you and me, we don't know. So we look at the valuation. That's what we have discussed in level 4. Please go through level 4. You have not gone through it, you will get an idea. So based on valuation, we go ahead. But let me tell you, India fundamentally it's very strong compared to like our neighboring countries, and like they were heavily dependent on countries like China. We are not. That's why China don't like us. Okay, so it is not that easy. Okay, anything is possible. Anything is possible, and we have seen it historically, right? But at the same time, it is not that easy for India at least. Got it? So now give me some practical question. Okay, don't give me philosophical questions. Very difficult. Sir, I have home loan EMI 1 crore and long term 10 years for education. I want to have 1.5 crores. Should I focus on home loan closure or long term requirements? Now you see, these are you have already committed mistake. Let me tell you. You should have joined my course or not this course, my higher level course. Okay, sometime back before taking this decision. Now, since you have taken this decision, now it depends on you. Let me ask you one question. Mr. Satish Kumar, are you there with me? Are you there with me, Mr. Satish Kumar? Okay, you are there with me, right? Now, what is the return? What is the rate you are paying for your home loan? Quick. What is the rate you are paying home loan? 6.95%. And how much over a longer period of time? How confident you are that you will be able to make at least 12% or 11% or say 9% return? Are you confident 100% that you will be able to make somewhere around 9-10% return? Satish Kumar. Okay, you see, if you are dependent on something without knowledge, then it's better not to take risk. Get rid of it. And if you are confident that you will be able to make somewhat 10-12% return, then just let that home loan like be that, and you start investing for your education. But if you are not, then get rid of the loans. Very simple. It depends on your knowledge level. Okay. And again, on Sunday we are going to talk about it. Do not invest in anything that you do not have knowledge of about. Okay, only you invest in things, buy things where you have knowledge, and you have seen. We have already calculated out what happens, right? And I'm pretty sure I'm going to get some more. Okay, just a moment. Format. Okay. So now next is coming from Mr. Chandana Ashok Naidu. How to identify future performance of new mutual funds, existing funds, other than past performance date to invest. You see, Chandana Ashok Naidu, it said, this is what you are talking about. This we actually discuss in our next level course, right? In the next level course, we master mutual fund, right? So this, you just cannot, I can tell you like, in 1 second, there is no good mutual fund, no bad mutual fund. Okay, all the types of mutual funds, they are all good. But, and depending on the time and depending on your requirement, you need to keep changing your mutual funds. That much I can tell you. Okay, so this question that you are asking, how to identify good mutual fund, for that you need to have more knowledge. And what kind of knowledge you need? For that, I have given level 4. Chandana Ashok, have you gone through level 4? Have you gone through level 4, Chandana Ashok? Have you gone through level? Okay, please go through that. Then you will get an idea what I am talking about. Understood? So it's a big subject, right? Somebody who doesn't have any idea, he will recommend you like this. Okay, so if you somebody, and I am pretty sure such kind of questions are there. Okay, and I can see that. Now you see, if I ask you, hey, suggest me a good fruit. I want one good fruit for my life. Suggest me. Suggest me one good fruit. I'll keep on eating that fruit throughout my life. One good fruit. Can you suggest me? Can you suggest me one good fruit? Not possible. Not possible. That's what you need to understand. It's not possible to suggest one good fruit, because season to season, fruit changes. Same is like mutual fund. Okay. People who understand it, they will never recommend it until and unless you force him to recommend one. Then he will recommend one. Inside, he knows that he is not doing the justice. Okay, inside I know. Sometimes that happens with my friends. You do not say. Why I do not say? Because it cannot be said in 1 second or 1 minute or even 1 hour. It needs a couple of hours to make you understand how to choose right mutual fund at different point of time. Understood? You need to have that knowledge. Okay, mango. Can I take mango in all seasons every month? Understood? So that's why. And always remember, if somebody recommends you, hey, buy this mutual fund, very good. Okay, buy this stock, it will be 10,000. He doesn't have any knowledge. He doesn't have any inside knowledge. That's why he can. Okay, let me tell you a very simple example. Now you see, you tell your doctor, sir, I have got some pain here. Okay, please suggest me. Okay, just a moment. Okay, just a moment. Okay, I am just, all your questions, you just please post in this form. Okay, I'm just going to give you this. In this form, you please post your question. Okay, such that I do not miss them. Okay, so now you see, you are asking me. Now you see, you have just, you call up your doctor and you say, I have got pain here. What we will do, we'll ask you, okay, do this test, do this test, do this test. And after that, you come to me. You get all the tests done, you go to your doctor, he will see the test reports and he will tell you. So we'll start with this treatment, probably it will be okay. Okay. And now you go to a quack. What is quack? Quack is all these doctors who sits under a tent with some big speakers. They are quacks. Just call up quack. Hey, I have got pain here. He said, okay, come immediately. So I cannot go. Send somebody. I'll give him a glass of water. Tomorrow, empty stomach, you have it. And I guarantee from next day onwards, you will have nothing. A quack can guarantee because he has not seen inside. A doctor, he cannot guarantee because he has seen inside. He knows what is inside. Understood? Same way, somebody who doesn't know what happens that side, he can recommend you like this. Somebody who has knowledge, who has worked at other side, he will never recommend you like this. Always remember. Okay, so you need to have knowledge to choose right mutual fund at right point of time and to switch. Please go to level 4. We'll have some idea what I'm talking about. Okay. Okay. How to identify? Okay, sir, I am at age of 40. Satish Kumar. If I want 1.5 crores after 10 years and another 1.5 crores after 15 years, what should be my investment and where should I invest? Simply SIP. Okay, Mr. Satish Kumar, are you with me? Mr. Satish Kumar. Okay, so now you see there are 2 questions. Okay, I'll solve one question, then after that you'll be able to solve another question yourself. Then you can club that. I am just taking if another 1.5 crore for 10 years. Okay, first one 10 years I am taking. Okay. Okay, where is it? Okay, so Mr. Satish Kumar. Okay, I am writing Satish Kumar. Satish Kumar. Okay. First, you need to Satish Kumar. This is the question. Hey, please, everybody, please write your question only in this form. Okay. Always. Okay, you have got it. Somebody please copy it. Okay, it's already there. Okay, this is the form. Please post your question in the form such that I don't miss them. Otherwise, people get offended that I miss their question. So I'll try to answer everything one by one. I'll be there. Okay, I'll be doing. Somebody please copy and paste it. Post your questions in that form. This form. Okay, yeah. So now you see this is the question. Now this is a goal setting question. Again, we'll discuss in detail on Sunday about this. You are 40 years of age and you need after 1.5 crores after 10 years, right? So now we know we have the rate and we have the NPER and we have the PMT and we have the PV and we have the FV. Okay, so these are the elements. Okay, so now Satish Kumar, you need to be with me. Now Satish Kumar, you see, what do you think? First, what we'll have to find out in this case? Everybody look at this. How to set goals. Again, we are going to discuss it on Sunday, but since this question is there, okay, I'm going to answer. Okay, so now rate, okay? Just on number, awesome, guys. Awesome. Satish Kumar. So we need to find out rate first. After that, we will decide the second step, right? Satish Kumar, are you with me? Are you with me? Satish Kumar? Okay, fine. Okay. So now NPER. So what is the NPER here? NPER. What is the NPER? What is the NPER? NPER is, okay, it can be if you are doing yearly, it will be years. And if you want to do monthly investment, then it will be months. Satish Kumar, you say 120 months. Okay, beautiful. Okay, so 120 months. Okay, so months. I'm writing it months, so there is no confusion. So every month. Now you see PMT. PMT, do you know PMT? Do you know PMT? Satish Kumar, do you know how much you are going to invest? I want to plan for PMT. Okay, so you want to plan for PMT. Okay, so we do not know. What is the FV future value? What is the FV? 1.5 crores. Okay, 1 crore 50 lakhs. Okay, now you see there are 2 factors. Out of these 2 factors, we must have idea about one of them. Understood? Either we must know rate or we must know PMT. Okay, right? So now if you say, okay, every month I can invest this much, right? So then we will put this figure here. Or you can say, I know one investment, I know one mutual fund, or I know one place which will give me this much of return approximately. You don't have to be exact. Okay, this much of return approximately, I am sure. Okay, so if you know that, I need that figure. If you can give me this figure, then I'll calculate out this. If you give me this figure, then I'll calculate out this. Tell me, Satish Kumar, Ajay has said 12%. Now, Satish Kumar, tell me. Let's say I can put 15,000 per month. Beautiful, 15,000 per month. So minus 15,000. Okay. So now we need to find out the rate. Very simple. Now we know what is the formula is equal to rate number of period like 20,000. PM is minus 15,000. Then future value is this much, and it's 1. $15,000 in 120, you will be, how much will be making? If you, even if you do not invest, you will be making 1 crore 80 lakhs. 1.8 crores, sorry, 1.8 crores. So you don't have to make any investment. Satish Kumar. PV will be 0. Yeah, PV is, yeah, PV payment per period. Yeah, PV will be 0. Sorry, PV will be 0. Even that. No, 15 lakhs. Oh, 18 lakhs. Oh, I'm so sorry. Yeah. So sorry. 15 lakhs. Okay, yeah. 0.03. 0.03 means 2.83% per 2.83% per 2.83% per month. Okay, so this will be equal to how much? 2.83 into 12, around 34% per annum. So now you see this is a very big challenge to get 34% per annum. It's a big percentage. Satish Kumar got it. It's a very big percentage, but there is a but. What is this but? You need 2 things. First thing is that something called stepped up annuity that we'll discuss on Sunday. Okay, so you will be a happy person. Please do not miss Sunday. Sunday at 10:30. Okay, so Sunday at 10:30, we have the master class. There I will show you another method, stepped up method. Okay, this is one thing. And second thing is that you need to have knowledge about choosing right mutual fund, and there is no one mutual fund which will work for you for 10 years. No, you'll have to keep on changing if you really want higher return. Okay, otherwise you will get 6% to 20% anything. So it's a luck factor. Okay, if you invest in Nifty Bs or Nifty index fund, you can get from 0% to 20%, anything in between. Most of the people, so not 0%, sorry, 6% to 20%. Okay, most of the people, majority gets 6% to 14%, that much only. This FIIs, institutions, they get towards the higher side. But you have knowledge, then you may get more than that. Okay, so that's what you need. 2 things. First is there one method that I'll tell you, you will get an idea. Second is that knowledge how to choose right mutual fund. Understood? Okay, so now I am going to, if rate 10, then it is a bad investment. This, you see, rate depends on the rate depends on you. You see, for me 20% is good return for me. For my students means like, you know, those who have joined my next level students. So for them, 12%, I've said you must get minimum 12%. Okay, so I am 100% sure. All are confident that they will get minimum 12%. Okay, for my mom, 6% is good return. If it's getting 6%, so do not touch. I don't need your expertise. Okay, better you give your expertise to all the big guys. I don't need 6%. I am getting, I am happy. For Junjunwala, it is some 100%, right? 100 some percent or some 100%, right? So it depends on their knowledge level. Understood? So now, Ajay Bhave, I have invested in mutual fund for 10 years. How do I decide I should stay invested or exit and go for a better return mutual fund? Can we take an example? I face challenge in balancing folio. I cannot decide which fund to get rid of, and also I have too many mutual fund schemes. Ajay Bharve, my simple advice, Sunday you join my next level course, you will get the answer. Understood? You'll be able to Without asking anybody, you will be able to balance your portfolio. You don't have to balance your portfolio. There's something else you need to do. You will understand once you join my next level course. Okay, very simple. I don't want to just beat around the bush. Okay, right? Yeah. And not only that, you will be able to advise others also. That is my guarantee. Today, I guaranteed you that from today onwards, nobody will be able to cheat you. So for return on investment is concerned, same way for next level course, I guarantee you will be able to teach others how to choose mutual fund. That's my guarantee. Got it? Yeah. What is the good rate should I expect from mutual fund and stock market? Mr. Vamsidhar Banga, I have already answered it. Right? It can be 0% to 40%. And as I have said, index has performed 10 years 0% to 20%. Median is 14%. Majority is so not 6% to 20%. Majority is 6% to 14%. That's the majority. Near the bottom is the huge number. Very few is towards the up. That's how it is. Why it is so, you will understand on Sunday. Now, this is a beautiful question. Abhishek, are you there? Abhishek, are you with me? Galaxy actual rate of inflation is 5.13%. I have calculated it just 2 months back. Okay, 5.13% is the average. But now we are facing 15% or something. Okay, today this data has come 15%. Oh my God. Okay, anyway. Okay, Mr. Abhishek, are you there? Yeah, okay, you are there. So you see, Abhishek is asking a question. I think it's where we need to do Jeevan Labh installment payment starting from 2,000 per month, calculation for 5,000 per month, pay 5,000 per month for 16 years. Then after 9 years, you get 32 lakhs lump sum or annuity. Okay, so I am going to do one. Okay, annuity is 28,000 per month or 36 per till 75 years of your age. Additional benefits, which one I'll take? Which one I'll take, Abhishek? You are giving this or this, either first one or second one. Which one I'll take? Tell me, Abhishek. Second one or first one? Abhishek, tell me. Which one I'll take? First one. Okay, fine. First one I'll take installment starting from 2,000 per month, pay 5,000 per month. Okay. Calculation for 5,000 per month. Pay 5,000 per month for 16 years. Then after 9 years, you get 32 lakhs lump sum. This is Abhishek, right? Okay. We'll join on Sunday master. Yeah, please do not miss Sunday master class. Okay. Okay. Now Abhishek's question. I am taking Abhishek. Okay, Abhishek's question. I am going to share this sheet. Don't worry. Abhishek. This is okay. Abhishek, this is okay. Abhishek, this is okay. This is the question. Abhishek, this is the question. Please confirm. Pay 5,000 per month for 16 years. Then after 9 years, you get 32 lakhs lump sum. So now this is, I am not getting it. So I need to be clear. Like, 5,000 per month for 16 years. Okay, for 16 years. Then after that, after 9 years, okay, 16 years you'll have to pay. Then from 16 years to 9 years means total 25 years. Am I right? Abhishek, am I right? Mr. Abhishek, am I right? Abhishek. Hey, if you're not there, then no, I'll skip. Because I need to be clear that we are doing the right calculation. Abhishek, are you there? Yeah, okay, yeah. So this is right. For 16 months, every month you will pay 5,000. Okay. Then once your payment is so at the end of 25th years, 16 plus 9, 25th years, you will be getting 32 lakhs. Am I right? Is it that? Okay. Okay, fine. So now here is the period. Same, and here is the cash flow. So now 16 years. 16 years means 16 into 12. How much it will be? is equal to 16 into 12. Okay, then 192. And then 16 plus 9, 25 years. Okay, is equal to total will be 25 into 12. It will be 300. Oh my God. Okay, 0, 1. So 192, then 300. 192. So that means 197. Oof. 197. Okay. So till here you are paying 5,000 per month. Okay. So minus 5,000. And after that, minus 5,000. Then till 300, you get 32 lakhs after 300. Okay. 300, that means 305. Oops. Oof. 300, right? 300. Here you are going to get 32 lakhs. And in between you are getting 0. From here you are getting 0. Abhishek, am I right? This is right, correct? These are all months. Correct? Abhishek, correct? Abhishek, correct? Is it correct? Okay, fine. So now what we'll have to do, now you know it's very simple. You see, once you put the timeline and the cash flows, that's it. After that, everything will be done by the computer. Okay. So what we'll have to do? Now it is computer's job. So you need to give the command. What will have to do? Abhishek, tell me. What will have to do? Quick, 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 quick. People are leaving. Quick, quick, quick. What will have to do? Abhishek, what will have to do? You know it. Tell me. Yeah, IRR, very simple. Equal IRR. Equal IRR. Okay. Probably you'll have to give comma 1 because there are so many. Okay, you don't have to. You're losing money, man. You are losing money. There's something wrong. So there is something wrong. There is something wrong. Please check. No, there is nothing wrong. There is nothing wrong. I don't know why you're getting, okay, just a moment. Okay, so you'll have to give 1% now because there are too many data. That's why. Okay, 0.57%. You'll have to please, when there is a very huge number of data, so you'll have to give 1%. Okay. Just always give 1% at the end. Always give 1% at the end because you see, now I can find out easily, like, whether there is a wrong or not. Okay. So since you may not be able to do that, so always give 1%, you will get correct answer. Okay. So this is 1% per month. So this much you are getting is equal to 0.57% into 12. How much you are getting? 6.some%. 6.78% per year. Got it? Abhishek? LIC CSR is, I don't know, like, why, how LIC CSR is calculating that. Okay, this is the mother of everything. Okay, this is the mother of everything. Okay, one by one. Please put all your questions in this form. I have already given you the form. Somebody please copy and paste it. Can somebody please copy and paste the form link? Just a moment, I'm giving it. Okay, please put your question here so that I don't miss them. Yeah, here, this one. Yeah, okay. So now, Dhiraj Bhavesh, what best mutual fund for lump sum amount? There is no best mutual fund for lump sum amount. Give me best subject. Give me a best vegetable. There is no best vegetable. There is no best fruit. There is no best mutual fund. All mutual funds are good. I am not saying all mutual funds, but all kinds of mutual funds are good. Okay. Among different, like, you say mango is good, but you must have that ability first. You must have the ability whether this is the right season for mango. This is the first thing. You know this is the right season for mango. Now, second ability is that, okay, this is the right season for mango. Now, amongst the mango, which one mango is good? This is the second level skill, right? Same is with mutual fund. Exactly same is mutual fund. All different, okay, what are the different types of mutual funds? You tell me. What are different types of mutual fund? What are the different types of mutual fund? There are equity mutual fund, there are debt mutual fund, there are money market mutual funds. Okay. Equity mutual fund, there are different types. Index fund, large cap, mid cap, small cap. Again, there are other also sectoral funds. And then there are, in case of debt fund, how many types? In case of debt fund, how many types? In case of debt funds, how many types? Long duration, mid duration, short duration, low duration, ultra low duration. Then there are money market. There are different types of fruits. Okay. So now you know, suppose at this point of time, say large cap is good. Say, consider, suppose large cap is good. Okay. So you must have that knowledge that at this point of time, looking at the valuation of the market and situation of the market, large caps are good. Now, next level knowledge will be amongst that large cap. There are so many large caps, hundreds of large caps. There are hundreds of thousands of mangoes. Amongst them, which mango is good? You will have to have that ability. Understood? That's how. So it's not like, okay, so you just buy one mutual fund throughout your life, like you will be spending your life in a one mutual fund. That is not going to give you result. Okay, it may give from 6% to 20%. Okay, or might be 0% to 40%. Anything. That's like gambling. When you have knowledge, you can control it. If you have no knowledge, then you'll have to gamble. Understood? Very simple. If lump sum gives good return, then shall I stop and withdraw all money from monthly SIP and put all money in lump sum mutual fund? Bhushan English, it's not like that. So you need to, as I have said, or I have already answered it, you must have knowledge about choosing right mutual fund and how to switch. Please go through level 4, you will understand it. Please suggest how much will invest to get 50 crores. Okay, Lokesh, Mr. Lokesh, your question, I am 33, I want to retire at 45. Please suggest how much I will invest to get 50 crores. I have already suggested one problems I have already solved. You know how to solve this question. Please go through it. You will understand. Again, Sunday, we are going to discuss about retirement. How to plan for retirement. I am going to show you where you should invest money to get best results. I have already answered it. Okay. There is nothing called best. It keeps on changing. Sir, some policies that we invest for long term has a payout once in 2 to 3 years. How do you calculate that? Punya Shloka, so same IRR. If you give me right now, right, like an exact cash flows, I'll be able to, I'll solve it right away. Okay, but you'll have to do IRR, simply IRR. Inflows, outflows, net inflows. Give me the cash flows, I will show you. If we invest in LIC, then can we get out now in any way? Very difficult. Can you share a sheet with examples and formulas for future reference? Vinit Shukan, have you finished the Vinit Shukan? Are you with me? Vinit Shukan, Mr. Vinit Shukan. Vinit Shukan, are you with me? Vinit Shukan. Actual rate of inflation average is 5.13 average for India, long-term average. Vinit Shukan, are you with me? Vinit Shukan, are you with me? Okay, Vinit Shukan is not there. Okay, so now if I want to do 5,000 per month investment for 15 years, how to get maximum return? How to get maximum return? Only way to get maximum return is have knowledge. More you are inside it. Okay, you see, investment is a long-term job if you really want to have huge return, right? Okay, for Junjunwala, for Daman this is their full-time job. for all of fund managers and analysts, that's their full-time job, right? And they have that much of knowledge. First, you'll have to have that much of knowledge in full-time job. I'm not saying that you are going to do full-time job or you should do full-time job, but still you have some level of knowledge, okay? Because the dynamics keep on changing, market keeps on changing. Along with that, you must keep changing your mutual fund. That is the real truth. All these institutions, they are selling their products because I came from that place, right? Because it is easy. Stick to one mutual fund throughout your life, you will make this much of return. You do not make return. It's your luck factor. Okay? To make good return, you must be active. I'm not saying full time, but you must have some knowledge. Okay? And let me tell you very frankly, if you want to have that knowledge, either you should join my next level course or you can do somewhere else also. Okay? But you must have knowledge, then only it's possible. Otherwise, it is equivalent to gambling. And I have given you the data. How to save taxes for salary? What are the options for investment? Tax is we haven't discussed at this level, so this is out of syllabus. Don't ask me anything out of syllabus. Jibin Thomas, are you there with me? I am starting SIP in mutual fund for 1 lakh per year for 5 years. Rate is 9%, but for third year I have additional 5 lakhs to invest. Can I calculate future value? Should I invest in separate mutual funds or should I add to the existing SIP? Okay, if you invest for 5 years SIP and 4 years there is recession, then we should withdraw and reinvest once the market is recovering, or should I continue with SIP? Okay, he is asking. Jibin Thomas, are you with me? Jibin Thomas, okay, beautiful question you are asking. So I'm pretty sure you have gone through my level 4. Am I right? Have you gone through my level 4 or no? Or you have already this much of knowledge? Jibin Thomas? Still in 3? Okay, so but still you are asking questions which I have discussed in level 4. Please go through level 4. So you will be able to understand it much better way. But still I am taking this question. Okay. It's a subjective question, but still. Duplicate. Mr. Jibin. Okay. So you see, your question is long. I think tomorrow morning will be over with our questions, right? Okay. Starting SIP in mutual fund for 10,000 years. Okay, so now again, for 5 years terms, rate is 9%, but from third year I have additional 5 lakhs to invest. Can I calculate future value? You see, you will have to calculate out separately. 2 calculations you will have. Jibin, got it? First is, you see, I'm just writing all these things: rate, NP year, PMT, PV, FV. Okay, this is the case 1. In case of case 1, your rate is, you have already said 9%, and your NP year is 5 years, right? 5 years, and rate is 9%, but from 9 years I have additional, right? Okay, so you have additional, so this will continue and then additional, so this will be second case. Okay, then you'll have to, PMT is minus 1 lakh, PV is 0. Future value we need to calculate out. Okay, so I'm just straight away I'm doing future value will be, rate is 9%, number of period 5. So you are doing additional like a per year. Okay. Payment amount is, PMT is this much, and after that present value is 0. Well, it's 1. Okay, so you'll be, from case 1 you'll be getting this much. Now case 2. So this is case 1. Case 2, you will be from third year onwards. So then this is same 9%. NPR will be 2 years. Okay. PMT will be additional 50,000. So minus 50,000. To invest, can I calculate FV? PV is again 0. And I'm just, you see, this is very easy. Like I can copy and paste it. So it will be, okay. So this one. Okay, so now total FV will be your total FV will be your this plus this 7,66,000. Okay, Jeevan got it. So this much will be your total FV. Now, should I now okay? Can I calculate FV? You can calculate out FV. This is how you can calculate out FV. Should I invest in separate mutual fund or should I add to the existing SIP? You see, there is no hard and fast rule. Really speaking, what we understand, like in our next level, what we discuss, we go goal based, right? For each and every investment, and again, we are going to discuss it on Sunday, you will understand it. So for each and every investment, we have goals. Once the goals are made, okay, so like we can understand, okay, so this is planned, everything is planned. Then after that, whatever remaining, suppose you can invest every year, say like every year, you can invest how much? 1 lakh, right? So every year 1 lakh. So you have found out after doing all the goal-based planning, so that 80,000 you can if you invest 80,000, you can achieve your goals. Then the rest 20,000 or whatever is remaining, that you can play. You can take risk and you can invest in some like just for fun or just for getting additional return, right? But otherwise we go for goal-based. And when it is a goal-based, then depending on your goal and depending on your situation, you will have to choose different kind of mutual fund. It depends on two things. First thing is that how is the situation and what is my requirements. Like you see mango is not always ripe. Mango is not always good to eat. Sometimes it is ripe, sometimes it is not. We should not eat. But if we need for pickle, we must get kacha, we must get green mango. Got it? So it is like that. So that for that you need to have knowledge, right? So when you have that additional knowledge, you will understand whether you should go for ripe mango or you should go for kacha mango, right? Go for green mango, right? And if you want ripe mango, now is it the right season for the ripe mango or not? Both the things you'll have to look at. Understood? So it's very difficult to answer in one go. And when somebody has knowledge, if somebody doesn't have knowledge, he can give you answer fatafat. If we invest for 5 years SIP and 4th year there is recession, then we should withdraw and reinvest once the market is recovering. Yes, this is actually other way around, and this is why people lose money. 98% people lose money. Okay, note it down. 98% people lose money in equities. 2% people make money. Okay, that's why all the analysts, they are given very high salary by all our financial institutions, right? These are the people who make money. So now what you are saying, it is exactly it's ulta, exactly it's other way, right? And you will get an idea if you finish level 4. You will get an idea what I am talking about. Okay, so please finish level 4, then you will understand how to balance the risk using different mutual funds. You will understand that, okay? Because like it will take long otherwise. Okay? It will take another minimum 1 hour. Understood, Mr. Jivin? Please finish that level 4. You will get some idea. Okay, and you see, you should always shift. You see, there are 3 stages of investment. I'm telling you how people commit mistake. First stage is you sow. Everybody knows how to sow. Somebody gives WhatsApp message or call. This will give you 100% return. People sow. That's fine. Everybody can do that. Okay. So this is the first stage. Then after that, there is growth stage. That's the nurturing. Then after the harvesting, right? So a lot of people, many people knows when to sow. Some people don't know when to sow. That's then after that growing, then harvesting. Most of the people harvest it when it is already rotten. Okay, everything goes bad, then they harvest. Those who are smart, like my students, they do not harvest when everything is bad. They harvest when everything is good. Understood? That's why they belong to 2% people who makes money. Rest of the people, they always harvest when everything is rotten. So they will be waiting and waiting till everything gets rotten. After that, they will start harvesting whatever is left. Okay, so don't do that. Please go through level 4. You will understand what I am talking about. Okay. Chandana Ashok Naidu, if I am chance to get in tomorrow's, not tomorrow's session, We will be at Sunday 10:30. No, Sunday 10:30, we are very particular. You see, we are very particular. There are some criteria. Not everybody can join our next level course. There are some criteria. Okay, we expect some commitment from your side. We are going to take care of your investments, your life, financial life. Okay, and this is a lifelong commitment. It's a lifelong course. So we expect some discipline, some commitment from your side. So it's not that we are not going to follow you up. We are not going to give you call. Okay, so those who are sincere, who are there on Sunday, only they will be eligible, and against amongst them, only few will be eligible to join next level course. I'll tell. Okay, there's no exam going to happen, right? But I'll tell. Okay, these are the criteria you'll have to fulfill, right? So we are very particular. So you must be, if you really interested in joining next level course, you must be present on Sunday. We are not going to discuss anything. We are not going to follow you up. We are not going to share anything in the group. No. Because it's a big commitment, right? When I'm saying I'm taking your lifelong investment, I'm taking care of your lifelong investment, right? So you also must have some commitment. Okay, again, Davis Miti. Okay, not many questions. Okay, fine. Okay, not many questions. Okay, Davis Miti, sir, I have some investments at different stocks, about 1.24 lakhs since the market is down. Since last few months, my return is negative of 11.92%. Sir, my question is, should I continue investing or withdraw my losses? Davis Mite, are you there with me? Davis Mite, are you there? If you are there, then I'll talk. Davis, are you there? Okay, Davis, you are there. Okay, you see, this is a very difficult question. And this is what I have just said. In the previous question, Jibin Thomas, this is what I have answered. People do 98%, you are not alone. 98% people, they harvest when the market is bad. My students, they become very happy when the market is bad. Okay, so they become fearful when the market is good. But how to know when the market is bad, when the market is good? For that, you will have to give me 8 hours, right? For that, you'll have to join my next level course. Now you see, at this point of time, it is difficult. Nobody knows. So we do follow market valuation, and we do not invest in shares directly. I have spent my whole life in equities. I have done everything in equities. I have designed IPO, how much should be the price of an IPO for companies when they are coming out with IPO, how to sell it, where to approach, how to market, what should be there in the presentation, how to sell it to the public, everything I have done. I have restructured the company. After restructuring the company, different companies I have created, big companies, and how to sell the stocks to the FIs, how to get the stocks out from the public, everything I have done. Since 2016, I have not invested a single penny in stocks directly, because I know what happens inside stock market. Okay, I invest in mutual fund because I know how to control mutual fund, how to switch, how to shift from one mutual fund to another, when to switch. That's the important thing. Okay, since I know that, I invest in equity mutual funds, and rest of all these things that is being taken care of by the fund manager. That is his job, not mine. Understood? So even after spending my whole life in equities, and it's not just buying and selling equity in front of the terminal. No, I was other side of the terminal. We used to supply equities to the market. Okay. So I have seen inside. That's why I do not invest directly in stocks. I invest through mutual funds. Okay. So my main suggestion is right now, do not invest in anything that you have no knowledge. If you have knowledge, then you invest, definitely. If you have no knowledge, do not invest. That's what it will happen. And we have seen today, we have done these calculations. All these calculations, you can see people are investing, getting 5%, 4% return, getting negative returns like this. And this will continue to happen if you continue this way. No one knows what will happen. Okay, but we know whether the season is good or bad. Now, at this point of time, stocks, I cannot comment. But if you are investing in mutual funds, Okay. If you're investing in large cap mutual funds, right now, today, tomorrow it may change. Today, you can hold on only for today. Tomorrow's situation can change. Understood? That much I can tell you. Okay. You cannot spend your life in one mutual fund. I'm repeating again, such that it gets inside your head. Understood? Davish, understood? I do not know. I do not know. Davish. Now, Kapilesh. Kapilesh, are you there? Kapilesh, are you there? Kapilesh, are you there? Kapilesh, are you there? Kapilesh is not there. Okay, so since not there, I am skipping this. NR, are you there? NR, Mr. NR, not there. Swasti. NR, you are there. Okay, NR. If one have 2 lakhs to invest for good return of monthly income, where to invest? You say again, like I have already answered it. You see, like, if you have no knowledge, then wherever is relevant. What is the one product that you say you have proper knowledge, this much return I'll definitely get? NR, tell me, what is that product? Tell me that product that you are 100% sure that you are going to get return. Or at least 80% sure. NR, tell me. NR. Tell me, what is that product where you are 80% sure that you will be getting some percentage of return, whatever. 80% sure. If you cannot answer, I cannot answer. That's the main thing. Okay. So this is how it is. This is the reality. Okay. If you do not knowledge, then you'll have to keep on asking whole life. If you have knowledge, you don't have to ask anybody. As simple as that. So now, Swasti, similar LIC policies take Jeevan Anand. Could I get out now? Will it be better to get out now or continue? Swasti, are you there? Swasti, I have said, like, if you can get out, get out. If it is giving not good return, if it is possible to get out, you get out. That's very difficult to get out. Let me tell you, because I know it. Okay. So at least make sure you are not going to make any other investment in such kind of products, right? If possible, you just ask them if it is possible to get out. Okay. Do that. And like, you see, like, those people who have knowledge, because I ask this question. Even like, to my next level students also, I ask this question. Okay, how much return you can make? He says, sir, I am confident that I will be able to make 15% return. Confident. Okay, confident. Now we do what we do. Let me tell you, I am telling you how to do the calculation also. I am telling you what I say. If you continue with these schemes, LIC schemes, what will be the future value? Calculate it out. Number one. Number two, you forget that. Okay, whatever money you are getting, because you will be getting, they will deduct some money. Whatever money you are getting, consider it as PV. And whatever investments you are going to make these investments in your mutual funds, in your own scheme, in your own knowledge. What will be the PV, future value, after the same period of time? If that future value is significantly higher than the future value that you are getting from the LIC, you must stop it right now. That's it. Very simple. Now, for this second calculation, you must have the confidence that I will be able to get this much of return. Okay, that much confidence you must have. And this confidence I do not give them. Okay, I give them knowledge and they get that confidence. Okay, they tell them, okay, I am pretty sure I will be getting minimum this much of return. So this should come from you. Otherwise, what will have to do? I'll have to manage your money. Also, it is like that. Kiran Kumar, is small case alternative for mutual funds? A small case is a mutual fund. Very bad kind of mutual funds. Okay. That much I can say in one language. You had not mentioned about flexi cap funds in level 4, kindly guide. Manish Kakkar. Manish Kakkar, are you there with me? Very good question you have asked. Manish Kakkar, are you there with me? Okay. Okay. Please understand this thing. People who do not have first day goes inside the mutual funds, they just buy mutual fund. Okay, some mutual funds they buy. Okay, so this is the very preliminary. Some mutual funds. Okay, any mutual fund, suggest a good mutual fund, you give a name. Just going by the name, if they like that name, so they buy the mutual fund. That is the first level. Then after that, people come to realize that there are actually mid cap, there are equity, debt, and there are money market fund. Okay, okay, fine. Then okay, let us buy small everything. Some equity, some debt, some money market. Okay. Then they get second level. There is something called hybrid also. What is hybrid? Hybrid is mix of equity and debt. Okay, fine. Then forget equity and debt. Take some hybrid. Take some hybrid and then take some money market. Okay, they are satisfied. Okay. Second level knowledge. After that, they come to know, okay, that in case of mutual fund, equity mutual fund, there are large cap, mid cap, small cap. Okay, okay, buy everything, small. Okay, thoda sa large cap, thoda sa mid cap, thoda sa small cap. Right? Then after that, they come to know, okay, there are flexi cap or multi cap. Okay, get rid of everything, take flexi cap, take multi cap. So now you invest everywhere. This is being done when you do not have knowledge. When you have knowledge, you neither go for multi-cap, not go for hybrid, not go for flexi-cap. My students, we know exactly whether we should go for large cap, mid cap, or small cap. If it is large cap, which particular mutual fund inside large cap? For that, you need to have knowledge. We have that kind of knowledge. Okay. If you do not have knowledge, then you buy everything. You buy multi-cap, you buy flexi-cap, you buy hybrid. I have knowledge, and that's what I'm trying to give you. In level 4 also, I am not talking about flexi-cap, hybrid, etc., because you are not supposed to. Okay? If you have proper knowledge of mutual fund, you are going to take decision whether at this point of time you are going to invest in large cap or mid cap or small cap. Not somebody else. Those who do not have that knowledge, then they go for multi-cap, flexi-cap, and all these things because they have no any other option. Understood? Yeah. Have knowledge, be specific. Okay. So we are very specific. Which one we are going to buy for this purpose? Got it? Okay, unfortunately, I will not attend Sunday. Thomas Matthew, I would like to attend higher level course. Unfortunately, I will not attend Sunday live lesson due to function. I request you. Okay, you see, you can do one thing. Okay, Thomas Matthew, are you there with me? Thomas Matthew. Thomas, are you there with me? Thomas, are you there with me? Okay, so if you're not there, okay, fine. Okay, Shiva, advanced level course, please also explain expense ratios implications. You see, expense ratio is something, tax and expense ratio, right? So these are the two things people are bothered so much. Yes or no? Redmi Zoya Ahom. Namtu ki apna Redmi buli hai dekhisu. Apur Vyas, tell me, this tax and expense ratio, so these are the two most bothering thing until and unless you have knowledge. Bappi Devnath, nice to meet you, right? So once you have knowledge, then you will understand that both are, expense ratio is completely irrelevant, right? Completely irrelevant, right? Okay, where you put most of your energy, that is the complete irrelevant. And tax is something very piddly when you have knowledge. Okay. In the name of tax saving, people waste their money like anything. I've seen it. Okay, and we are going to realize it. In case you join my next level course, we are going to realize it. Tax is a very small amount when you have knowledge. Tax is a very small portion. In entire investment making decision, it is nothing. Investment decision making process, tax is almost nothing. Okay, now let me tell you. Okay, fine. Okay, chalo. Tell me, Just you give me like how much percentage you can expect if you invest in equity. Shiva, not Shiva. Who asked this question? 11%, right? Who asked this question? Tax question. Okay, fine. Yeah. Apurva only. Okay, yeah, you asked me. Okay, 11%, right? Okay, so 15%. Say 15%. Yeah, 15%. So how much tax you will have to pay? How much tax you will have to pay? Long-term capital gain. If you are investing for long-term, how much tax you will have to pay? Nora, how much? 10%. Why 10% on 15%, not on your capital? If you make losses, you don't have to pay. If you make 15% profit, then you'll have to make 10%. So 10% on 15%, how much has gone? How much gone? 10% or 15%? 1.5%, right? 1.5% is your tax implication. Now, let me tell you, when you invest for long period of time, and if you do the proper calculation and longer period of time, it is less than that. It is less than 1% or less than 1%. Or you can say approximately 1%. That's it. That's it. Okay. So if you're aiming for something, okay, you have chosen a mutual fund that is going to give you 11, 12%. And if you're investing for say 10 years, if you consider minus 1%, 11% for your calculation purposes, that is more than enough. You're not going to pay 1%. You're going to pay less than that. Ultimately, when you have to pay, we're actually going to pay less than that. Right? So now people do not have knowledge. So these things bother us, and because of this thing, they end up investing and wasting their money throughout their life. I have been trading crypto and stocks for 5+ years. I am averaging around 28% per annum. How do I invest? Okay, so crypto, I do not have any knowledge. And as I have said, directly, I do not invest in stocks, right? So I always invest through mutual funds. I take car loans, interest rate 7.9%. I will get 3 lakhs soon. Loan, pay or invest in mutual funds. Now, Bipin Chandra, are you there with me? Bipin Chandra Bhagavati? Bipin Chandra Bhagavat Bhai Patel. Bipin Chandra Patel, are you there with me? Bipin Chandra, are you there with me? Bipin Chandra. I think similar question I have already answered. Okay, you are not there. Sunil Shah, Sumil Shah, Sumil Shah, Sumil Shah, Sumil Shah is not there. Sumil Shah, you are there. Okay, so you are at age 56 and don't have any pension from my employer. So what to do? You see 56, so 60, another 4 years left, right? Sumil Shah, let me tell you what you will do. You should have joined my course long time back or somebody else's course long time back. Okay, so this is only thing is that you see it is very difficult for me to answer until and unless I know exact your assets and liabilities, right? So once I have your assets and liabilities, then I'll be able to give you some suggestion in detail, right? And the best thing is that so you should not, money matter is something, again on Sunday we'll discuss. You will see as you approach in your life, things becomes more and more difficult. Those who are pretty young stage, so it's very easy, but unfortunately people who are young, they do not bother, and we start bothering when you are already late. That's what happens, and you are not alone. I am also, despite being a finance guy, I also started my personal this thing very late. I was just happy-go-lucky person, like, blowing away my money until and unless one day I did the calculation, right? So I'll talk about that on Sunday, right? Of course, despite being a finance guy, since the very beginning, the first day, my job was to deal with finance only, but still I was ignoring it, completely ignoring it. And this happens. I think, you must make sure that your kids, they do not commit that same mistake. That much I can advise. Understood? Mr. Shah, make sure your kids do not commit that mistake. Okay? That much I can say. Can you use mutual fund charts to invest? Avinash Karkera, okay, I don't know What chart you are talking about? Satish Kumar, what is the average return for gold ETF and bond markets? You see, gold ETF and gold, we do not invest in gold. We do not discuss gold. Bond markets, you see, bond markets, again, there are different kinds of bonds. Different kinds of bonds gives different kind of returns. Okay, so there is no standard return, right? But still, main thing is that you can get, sometimes you can get 8-9% return also in the bond markets. Main thing is that you get tax advantage compared to FDs and all. So that's the biggest advantage. But again, like it depends. Different kinds of bonds gives different kind of returns, right? You see, like people normally look for shortcut. Okay, I'll ask one question and I'll get the answer which will solve my life problem. Everybody is in that mood. Right? Again, Sunday we'll discuss. So that is the very bad, and that's why 98% people lose money because of that. So they keep going everywhere and asking just one answer which will settle them for their life. Okay, this doesn't happen because things are dynamic, keeps on changing. Everything keeps changing, right? Everything keeps changing. Economy keeps changing, market keeps changing, valuation keeps changing. So you'll have to keep on changing. That's the only way. That's the hard fact. Right? And because it's a marketeers. Okay, just because they know, like educating people is difficult, and advising one wrong thing, like just choose one mutual fund and spend your life on that. That is easy. And particularly if you have already 40-60% return, it is much more easier. But that is the most dangerous thing. One mutual fund which has already given 60% return or 40% return, okay, or one stock, continuing with that is the most dangerous thing. That's what happens. Rushil Shah, are you there with me? Rushil Shah, are you there with me? Rushil Shah. Ashwarya, dividend is something like we have not discussed. Okay, so let us not discuss because that will take you in a very different direction. Okay, Rushil Shah. Okay, if I buy office of 2 crores on 1st July and if I want 6% return on my investments and I will sell it after 25 years, what will be its future value? Okay, this is a very big question, Rushil Shah. Okay, let me try to calculate it out. Okay, so because this is something very practical question. You see, you give me practical question, then I can show you how to calculate. But if you give me philosophical question, then okay, Rushil, right? Rushil Shah. I'm going to this thing. Right? Don't worry, I'm going to share this. Okay. If you buy office for 2 crore on 1st July and if I want 6% return on my investment, I'll sell it after 25 years. Okay, you see, like this is first. This is the thing. Okay, this is the thing. Okay, so now you will be if I buy office for 2 crores, right? So your now 2 crores is a small cap fund gives good return. Gautam, please do not go like this. Nowadays means there is nothing. Nowadays everything gives good, but you do not know until unless you have proper knowledge. Okay, so do not go by like that nowadays this is good, tomorrow. Yeah, nowadays it can give you good returns. Okay, now, a lot of stocks give 60% return, 70% returns also. A lot of stocks gives negative also, right? So if you are 100% sure that it will continue, give on going, then you invest. I'm not saying no. If you have knowledge about that, then you can go ahead. Okay. Main thing is that without knowledge, do not invest. Then it is equivalent to gambling. Okay. Now, Mr. Rushil Shah, are you with me, Rushil Shah? So now you see, if you buy rupees 10 crores. So now this is Rushil Shah. Rushil. Okay. So now this is 2 crores you are investing. Am I right? 2 crores you are investing, right? Rushil Shah. You are investing 2 crores rupees, right? Sir, apne master class or large cap mutual fund suggest no, I don't suggest any mutual fund as such, because as I have said, it keeps on changing, right? That's why I do not suggest any mutual fund as such. I cannot suggest. Somebody has knowledge. I am repeating again. Somebody has knowledge. You will never suggest one mutual fund. Okay, like you see, for us, for analysts, the big headache is people keep on asking everywhere. Like at least today I am not in TV. Earlier I used to be in TV. Like when I ever go, people those who are very much into stock, they could recognize me, and that was my big headache. Sir, please suggest one good stock, one good mutual fund. You see, we know inside, and this is a headache of not only me, everybody, all my colleagues, because we know inside that it is not possible to suggest one kind of fund. It is not possible. Okay, so that's the main problem. Okay, so now you see, like you are investing 2 crores rupees. Now this will be minus 2 crores. Getting it? Rusil sir, you have invested 2 crores rupees. Okay, Rusil. Now, and I am getting 2 crores on July, and if I want 6% return on my investment, 6% return on my investments means you are getting some rent. That's what you are talking about. Are you getting some rent? You are taking some rent? No, rate rise. Okay, rate rise. Okay, so now rate rise. Rate rise means 6%. Okay, fine. 6% is a rate rise. Okay, fine. So there is no NPER is 25 years. Okay, 25 years. And I will sell it after 25 years. What will be its first? Okay, beautiful. It's very simple. Okay, it's very simple. PMT is 0. PMT is 0 because you're not getting any rent, right? So future value is very simple. This is the formula. As you can have, it's very simple. Future value rate is 6%. Number of periods is 25. Payment amount PMT is 0. Future value is this much. You can give 1. Now, not future value, present value is this much. You can give 1. Even if you do not give 1, it's fine. So you'll be getting this much of money. 8.6 crores almost. No retros, okay? 8%. Very simple. It's very simplest. Okay, we have already discussed level 1. This is level 1. Okay. Okay, so now. Okay, now there are again the last 3. Mr. NR, are you there? NR, are you there? If you want to invest 20 lakhs to get 15% of monthly income, where to invest? What should be the portfolio? Now you see again, NR, you are asking me very difficult question. I have already answered. Why? So, what can I? Okay, you are asking me to create a portfolio which can give you 15% return. Right? The best investment will be invest on yourself first. Then definitely you'll be able to make 15%. But over a longer period of time. Okay, shorter period of it's not possible. Longer period of definitely, as I have said, 10 years. If you invest in Nifty B or Nifty mutual fund or whatever, probably you'll be getting somewhere between 6% to 20% return. Okay, at least you'll be getting some percentage, right? Positive percentage, 6% to 20%, right? So now, if you know how to control it, then your probability of getting more return will go up, right? And if you keep on shifting, you will be able to get more than 20%. But in that case, you'll have to keep on shifting, keep on switching. Please go through level 4, you will understand it. But in 15 minutes or in 1 hour also, creating a portfolio for you, impossible, right? Somebody who has knowledge, for him it is impossible. Somebody doesn't have knowledge, he can do it. Okay, because he doesn't have to think. Okay. How to know the right time to invest in mutual fund? Mithun Mukherjee, you'll have to have knowledge. Okay, you'll have to join my next level course. You will understand it, right? That much I can say. So what is the percentage return we get from real estate? Rusil Shah, you see, I'm not a real estate expert, so you'll have to ask some real estate guy. Okay. In fact, now I have some students, not some students, a lot of students who are builders, who are into real estate. So I always ask them because they are expert. I am expert in investment, right? So I am expert in mutual funds. I am expert in choosing mutual funds, and probably I am expert in choosing stocks also. But for that, you need really very different level of knowledge, right? And it's not necessary for those who are working and they want to have best utilization of their hard-earned money. For you, you do not need to have a analyst degree or analyst level knowledge. Not necessary. Sandeep Chura, is it better to invest through AMCs directly or through investment apps like Grow or Scriptbox? Sandeep Chura, are you there with me? Beautiful question you are asking. Sandeep Chura, are you there with me? Sandeep Chura, this is the last question. Sandeep Chura, Sandeep Chura, are you there? Okay, you're not there. Okay, fine. Okay, Sandeep Chura. Okay, you are there. Okay, fine. You see, it is, you see, like, it depends. It depends. If you are investing directly or you are investing, you see, in nowadays in apps also, you can invest in direct mutual funds. Okay, so it is same thing. Investing directly through AMCs or investing through apps, but direct mutual funds are the same thing. Understood? There are direct mutual funds, there are regular mutual funds. In case of regular mutual funds, these apps or that guy that you are going through or whoever is your advisor, he gets commission. In case of direct mutual funds, nobody gets commission. Okay, so now even if you use apps but you invest in direct mutual fund, okay, so mutual fund is not going to give commission to anybody. So it is one and same thing, investing in AMCs directly or investing in direct mutual fund through apps. There is no difference. Clear, Sandeep Chura? Clear? Sandeep Chura, clear? Sandeep Chura, clear? Okay. Okay, Vishwanath Mangle sir, really great lecture. This is full of truths that I never knew. I had misconception about SSY, NPS, PPF, MF, and stocks. You taught me on why one should not worry about tax, why stocks and mutual funds can be scary without knowledge. I personally thank you. Thank you so much, sir. Thank you so much. Thank you so much. Okay, it's my pleasure. Sometimes I feel tired when you guys say this kind of words. Then like that really encourages me. Okay, let's do for another 1 month. Okay. Because I have got sometimes what happens, particularly when a lot of people says, hey sir, what are you doing? Okay, so this is the big opportunity we have, this much fun, right? So sometimes I feel okay, am I doing or should I do something else? But when such kind of words comes, then I feel no, let me be here for another 1 more month. Right? Thank you so much. Thank you so much, sir, for your nice words. Thank you. At least like it gives me pleasure that this knowledge is really I'm helping you. Okay? That's the mission was that I'll help as many people as I can. Okay. Okay. Thank you so much. Okay. Anything else? Anybody else? Anybody has any other question? Because whatever question you have asked, I have covered all of them. If you have any other question, then you can ask me. If any other question you have asked me, Bhushan, if lump sum gives good return, then shall I stop and withdraw all money from monthly SIP and put all money in lump sum mutual fund? Bhushan, you see, this is how. So now you have lump sum amount, Bhushan. You have lump sum amount. You have lump sum amount, Bhushan. Swastina, yes, you can. Okay, if you have lump sum amount. Okay, just a moment. Swastina, thank you so much. It has been an eye opener. You have explained the complex things in such an easiest way. Thank you so much, sir. Thank you so much. Okay, it's my pleasure. It's my pleasure, right? You guys really help me keep going. Okay. Okay. Thank you so much, guys. Ajay, thank you so much. Ajay Ghaneka, thank you so much. Okay, now coming to Bhushan. Bhushan, you see, if you have lump sum amount, and where are you keeping that amount right now, Bhushan? Tell me, where are you keeping this amount? Where you are keeping that amount? Right now, where they are? In bank. This is the worst investment you are doing. Don't do that. Okay, so don't do that, right? But let me tell you, if you are really serious and if your amount is really good, right? Really this thing. Okay, my advice is, you please join my next level course. Then after that, you take decision how to invest, right? If you know that this is the return I am going to generate, then it is always better that you invest lump sum. Why we do not invest lump sum? Because our income comes on a regular way, unlike people like you, where you have got already like lump sum amount. Okay, then it's a different story. But otherwise, like for me, I know, okay, so if I invest, I'll be able to make this 20% return. I know that over next 5 to 10 years. Okay, I know that. So I always prefer to whatever I have put in the market, because I have that much of confidence. Now what happens, but the thing is, my own income also comes every month. So since my income comes every month, okay, it's not possible. Why? So as it comes, I keep on investing. So when you have confidence that you will be able to make this much of return, you'll be able to make this much of return, it's always better you invest lump sum. But in two conditions, we cannot invest in lump sum. First thing is that our income comes monthly, or whatever way, 15 days or 7 days or whatever, right? Our income comes in installments, so we need to go for SIP. Second is we do not have knowledge. When we do not have knowledge, then you need to average. Okay? So how will you average? Average is okay. With that, sometimes it will go up, sometimes it will come down, sometimes it will go up, sometimes it will come down. Okay? So you need to average out. But when you have control, then you don't have to do that. Okay? In the same way, what people do, people go and people buy this mutual fund, this mutual fund, this mutual fund, when people do not have knowledge. Then after that, okay, let's go for hybrid. That is good. Hybrid is also basically you are buying both. Well, let's go flexicap. But that's people do when people have no knowledge. When people have knowledge, people will not do that. People is specific. Okay, now this is the time I should buy mid cap, then he will choose mid cap. Okay, amongst that mid cap, which one is the best? There are so many mid caps. Which one is the best? We'll choose that one. Now, okay, now this is not the time. Now this is time for debt fund. Sell off mid cap. Get that money. Put in the debt fund. Stay there. Okay. When the time is right for a mid cap or large cap, sell debt cap. So that's what, sell debt fund. Put in a large cap. That's how you need to play. And that you can do when you have knowledge. Understood? Clear? Okay. Ajay B, that's what. Okay. That's why, when you are somebody has asked, I have made so much of loss, should I exit? Right? So people exit when they make loss. We take more risk when there is a loss. Please go through level 4. Who asked this? Ajay B. Have you gone through level 4? Have you gone through level 4? Ajay B. Have you gone through level 4? Not yet. Okay, that's why you are asking this. You go through level 4 that you will understand how to level the risk, how to balance the risk. All right? That's why my people, when the market crashes, they become very happy. Right? Even if they make loss. Okay? Because ultimately you make money when market crash, not when market is up. Always remember that. 2% people make money because they are happy when the market crash. Right? क्या बोल रहा है ये? What this guy is talking? Nonsense. Yeah. Okay. So for that you need to have knowledge. Okay. When you have knowledge, you'll be very happy. Hey, sir, market crashed, sir. Now this is our time. 2%. 98% will be crying. Looks like I'll do level 4 tonight. Yeah, please do level 4. Okay, so many questions I have to find out the actual value. Can I also use the charts of the mutual funds so that while the prices of the fund falls, I can purchase? Avinash, what charts you are talking about? I do not understand because we do not follow any charts, right? We do follow valuation of market. We do follow valuation of equity market, valuation of debt market. Based on that, we take our decisions. Okay. Okay. Please finish the course right before Sunday. Manoranjan. Okay, we'll talk. Tomorrow. No, not tomorrow. Sunday. It will be less than 10,000. So cheap, right? And I'll take care of you for your life. Look at that. See, I have offer today also. Okay, sir, what are you doing, sir? Please come here. Okay. 100 crores if I manage, so how much I'll get? At 1.5% or 1%? Even say 100 crores. Very simple amount. One man can give. Okay, but this is somewhere like, I really enjoy. You see, here I can tell the truth. There I cannot tell the truth. Okay, so I can tell you, yeah, these are the guys you see. They are all my clients once upon a time, right? LIC was my biggest client. Know that? Used to give me, LIC used to give me the biggest money every month. Okay. So now I am not associated. So I can tell you, hey, you are getting cheated by this. I can tell. Right? Okay. So this is the reason, like, why it is. Now I can sleep properly. So I know, like, I can tell the truth. Okay, guys, Sunday morning at 10:30. Okay. So guys, thank you so much for being here. It's already 10:45. Oh my God. 10:45, right? Sunday, please come prepared. It might go long. You have seen it today because I'll answer all your queries. So please come prepared, right? So it might go long. I'll answer all your queries on Sunday also. Sunday 10:30. Do not miss it. Today, this is a transformative. Sunday also going to be super transformative. Okay. So today we have mainly discussed how to protect your hard-earned money. That is the first step. Sunday, I am going to show you how to make money. Okay. That's what we are going to discuss. Okay. This next level. Do not miss it. Good night. Do not invest in anything that you do not have any knowledge about. Always remember that you can make a lot of money. And Sunday, if still you have doubt, Sunday you come, you will realize that with knowledge, if you can invest, you can really make a lot of money. Good night. Thanks.